It's Sunday the 7th of February 2021. I just wanted to record a quick video on the gold price and some of the index charts and some of the mining stocks, just do a quick sort of chart blitz. The gold price itself sort of been fluctuating around the 1850 level previous that I talked about previously as kind of a key sort of pivot level. But it did look like the last couple of weeks it wanted to trend lower, sort of been dipping into this 1820 zone and then finally sort of cracking through it. You know, the more times, typically sort of technical analysis wise, the more times you test the level, the more likely it's going to be broken the next time. And that 1820 had been tested a couple of times. We had these good sort of long wicks, but then it struggled to get, you know, above sort of this big candle here. It struggled to get above there with any real substance, sort of trying to get back above that kind of the. Often I look for these sort of this midpoint of a candle like this. You want to see it get back. If it can break above kind of the middle of that candle, maybe the market's got a bit more strength in it. But it looked like we were seeing very similar price action to what we had in November, where the market sort of bounced around for a couple of weeks, but still struggled to break above the sort of the midpoint of this big down candle here. And the mining stocks in November I talked about, they were leading the gold price down, probably with 3 or 4 days ahead of the gold price. And that's similar to what we saw last week. A lot of the mining stocks were down pretty heavily on Wednesday, I think, and then they were front running the gold price almost. And then on Thursday we had the big fall from sort of 1830 and testing the 1780 sort of levels. Had a nice bounce on Friday. Sort of see if there can be any continuation of that. It'd be good if we could get back up to that 1830 level within the next couple of days, and that might sort of signal a potential bottom here in the market, similar to what we had in November. I don't think there hasn't been a lot of strength behind some of this gold price move on the downside. I don't feel like there's any sort of genuine substance to this really heading a lot lower. I'm still in that bullish phase, but I've been sticking out of some of the mining stocks and not putting more money in there. I've been watching quite a few stocks and just sort of last couple of weeks just sitting back and watching the gold price, because it doesn't look like those stocks are going to rally without the gold price moving significantly. Last week we had the silver move, and that sort of put a bit of a shock into the market to pump some life back into a few of the silver stocks and a couple of the gold stocks as well. But generally it's looked pretty weak, so I've been kind of trying to stand aside. Long term, I think the chart still looks pretty positive, but I think we need to need to see a move up here pretty soon. Otherwise, next levels, of course, that's sort of that previous low in November, and then I think this kind of 1750 kind of zone may come into play, and below that potentially sort of this 1680 to 1700 sort of level. On the long-term chart, if we zoom out a bit, we're really still, I think people talk about this previous high, and I've got the big purple line there on my chart, but it's also this level around where we are now that was the kind of the real resistance zone in the 2011-13 sort of peaks. That was kind of the tested resistance zone that formed. A lot of people would have been suckered into the market then, thinking that the gold price was going to break out to new highs and keep on its move. But that was the zone which created a lot of, support and resistance. And that's exactly where we are right now, 1790 to 1800 sort of level. So it's not a coincidence, I don't think, that we're moving around here. But I'd like to see, some relatively quickly. I think I'd like to see some movement up. Otherwise, I'm probably going to have to start, reassessing some of these stocks if there's going to be another leg lower. At the moment, I'm still thinking that we're kind of making a double bottom here, but you've got to be on your toes here, especially if there's some of probably the juniors as well. I think the juniors have held up quite well. The mid caps and larger cap stocks have been coming down quite a lot, particularly a lot of the Australian-based gold miners. But the juniors have held up reasonably well. But I think those ones, if the gold price breaks kind of below this, well, even if it breaks below 1750, I think you'll see some significant downside in some of those juniors that have held up quite well in the last 6 months. But I'm still hopeful that we're going to hold this level, but I think it's important to be on your toes here. Dollar index, I've seen a few things about the dollar index and how, this looks like it wants to break higher and all this sort of stuff. I mean, my base case is that the dollar continues to weaken. I think this downtrend, if this was a stock chart, I wouldn't be buying this as a bottom. You can see we've got this little mini sort of head and shoulders bottom that have formed here, this inverse head and shoulders with a sort of 91 level breakout. And I thought we had a big sort of bearish engulfing candle on that on Friday. So maybe that's rolling over again. I think it's interesting. We had very similar sort of price action in August, September before it had a sort of a false breakout and then trended lower again. And I sort of, the idea here that the dollar index is going to be the destroyer of gold. I think statistically the correlation there, the sort of inverse correlation with dollar strength and gold price weakness is not actually that good. And I think I sort of used to chart that a bit more, and it's really sort of fallen away, I think, in the last couple of years. Last year in the dollar index, it sort of started the year probably, what's that, about 95 sort of level, 96, and trended up generally the whole year and then maybe tapered off toward the end of the year, but was generally pretty positive most of the year. But gold did very well in 2019 as well. That was a sort of the breakout year for the gold price. Starting the year at kind of 1,300 and finishing up more like 1,500. So that was a very good performance from the gold price despite dollar strength. And I think it's important to note that dollar index it's a measure against the other currencies, predominantly the euro. That's not necessarily bad for gold, and in a market where a lot of the fiat currencies are weakening, or in fact all fiat currencies are weakening, you wouldn't expect that dollar index is necessarily a good guide to what the gold price is going to do. It's not, because everything in that basket is weakening against one another. It's just a matter of who's weakening most. That doesn't, in that environment, you'd expect gold to still be doing very well. So it's not necessarily a very good indicator of what's to come. But I do note, I guess, a lot of the US dollar assets, anything priced in US dollars, has risen. A lot of commodities have done very well, and I do expect that some of that to roll over. But I don't necessarily think it's going to be bad for gold in the short term. And I don't think this chart screams at buying dollars at this point. To me, doesn't seem logical. And I reckon we're in a short-term blip in a longer-term bear market. Similar to what we might have had in 2010, 2011 sort of thing. So anyway, that's my view on the dollar index. Other charts, S&P 500. I think we're interesting thing on this one. I've been sort of stepping aside from the freight train of this. I noticed, I think with some of the GameStop stuff and just sort of a mass speculative environment coming into the market in the last couple of weeks, sort of seen quite an uptick on the S&P 500 in terms of volume. If you look at sort of the 20-day average volume, that 20-day average is at the highest we've seen since the March lows, which was obviously a huge sell-off. So, and we saw a few sort of bigger sell-off days in the last couple of weeks, and a bit more volatility. Often that's a precursor to sort of a more sustained sort of move to the downside. I mean, you see that volatility and starting to bounce up and down a bit more. You've still got that wave of money behind it, with no one seeing any downside risk. So, I continue to be sit on the sidelines, but there's definite signs that we could see a little bit of a sell-off here in the short term, at least. And we do have sort of rising yields and all this sort of stuff as well. Whether that starts to factor into a weaker stock market is sort of unclear, even though I think those rising yields are more about potential signs of inflation rather than the strengthening, I guess, in the desire to own bonds, or the solvency of the US government effectively. Some of the mining indexes, pretty much what you'd expect. It's bottomed. The GDX is similar. Looks like it's trying to find a double bottom here at the same level that we had in November with the gold price. So it's kind of a reflection of the gold price. But I think the mining stocks have generally been a bit weaker than the gold price in the last few weeks. So, like I said, they're sort of leading but they're trying to find a bottom. But there's not, you know, the volumes here are pretty weak. It doesn't look like there's a huge sell off or anything. But maybe we can go back and test this 31 level, which is kind of the breakout zone. If you go all the way back here, that was the key level from last year, the breakout of 31. So that, if we see gold start to break through some of those levels towards sort of 1750 or lower, you'd expect the mining stocks to easily test this 31 sort of level. But you'd like that to hold on the on this chart. It's a sort of for a longer term strength. GDXJ I think looks pretty similar. They don't tend to deviate that much. A lot of the GDXJ is actually, they call it juniors, but a lot of these stocks are pretty are seniors as well. Really, it's not a great index, but yeah, it looks pretty similar. Probably a bit more choppy, and it's already kind of broken through that level. I don't place as much importance on the GDXJ. It's not as well followed, and the juniors probably not leading the market higher at this point. But still, it still looks positive on the longer term chart. But again, there's potential for more downside here as well. Maybe we can, last year's breakout zone probably more in this 43 zone, equivalent to that 31 on the GDX. So maybe we could have downside toward there. What's that? Another 15% downside if the gold price breaks lower. But I'm still relatively positive. But like I said, on the gold price, you need to be watching for those breaks of the levels. It's not going to be good for some of these mining stocks. And like I said, I think the juniors have probably got a bit more downside there. Some of the stock specific charts, none of these look great, to be honest. WAF testing this previous support level around these sort of high 80s. Again, volume's pretty weak here. So that 20-day average volume's, pretty low. So, you want these. If you start to see more volume come in here, it's an indication that maybe there's some, maybe things want to break lower. But it just seems like a kind of a bit of a malaise in some of these gold stocks, but not a lot of push for them to break a lot lower. I mean, they've come off quite a bit, and fundamentally these companies are making extremely good money at the current gold price. And I think the story for WAF is probably better than a lot of the others in terms of they've got a rising production, paying off a lot of debt. It's still a better story than some of the other companies where they're more about maybe declining reserves or slightly higher costs. And so, a story like Regis, has issues with potential slightly higher costs gradually over the last couple of years. McPhillamys project, that's already back at its sort of lows for the year. Trying to hold on to this key kind of 360 level. So this is a sort of stock that I'm looking to buy into, but just been hot waiting a bit because I see without the gold price moving, I see the upside risk on a lot of these stocks is pretty minimal. So they're really following the gold price at the moment. But if the gold price breaks lower, we could easily see this move back down to the low threes, and that might be a good sort of medium longer term entry point for me. So I'm not trying to. Often I try and jump into these things too early and predict the market, but I don't think need to at this point. So I'm just stepping aside a little bit. St. Barbara is probably the same. Probably even looks even weaker, struggling to find a bottom on these sell downs. It's getting sold down more than some of the others, and that reflects the sort of clouded view of the stock and still potential for a guidance downgrade that I mentioned in the quarterly report video a couple of weeks ago. Gold Road, another one that's looking a bit, not huge. It's trying to find a bit more of a bottom, I think, and it's another stock that I actually bought into back in mid-late November, but I sold it just because I thought, it didn't look like it was going to rally too much, and I thought that with the gold price weakening, it would probably have weakness as well. So, and the sort of the fundamental story there is, it's good, but the stock is relatively fully valued still. But I do like it for the quality of that asset. So I'm sort of, again, it's another one where I'm just thinking, no, I don't need to jump in too much here. the gold price to kind of potentially turn around or at least show a little bit more strength than it is so far. Silver Lake's an interesting one, and I think this is a chart. It's actually probably one of the weakest in the space at the moment, and I'm trying to sort of work out why that is. I think there's probably quite a bit of speculative money in this stock. They had a very good year last year and probably the year before as well. I'm also wondering if there's something sort of brewing beneath the surface in terms of kind of corporate action, whether they're looking to buy something. They've got a big cash balance, $300 million plus, and I sort of wonder if there's an acquisition building. Sometimes you see these stocks, that show weakness ahead of a big acquisition. Obviously, there's people who kind of have inside info there, and it's hard if it's a bigger deal. It's hard for that info to keep fully contained, and it might start to leak out. The stocks, there's been quite a few sort of high volume days. It's been sold off harder. The production report was okay, nothing unexpected in there. They're meeting guidance. Probably the numbers are maybe not quite as good as what they had last year, but there's something. It just feels like something's brewing there. So I'm a little bit. Again, I'd bought in November, but I sold out because I thought there was still more downside. And you can see this is one of the few stocks that has broken below its November level. So that to me just feels like there's something brewing there. I don't know what it is, or maybe I'm wrong, but has got an uptick in volume, and it seems like the sell-off's got more power behind it than some of these others, which are just kind of a bit aimless and just following the gold price. It seems like there's something more behind Silver Lake, so I don't know what that is, but I'm stepping aside and just waiting for a bit of a trend change there as well. I'm not going to be buying all these stocks, but I'm just sort of looking at the different options available. Perseus, I think, and I've said this before, I think the stock is with an improving production outlook in terms of a new asset. None of the companies that I've just talked about really have another asset coming online, increasing their production anytime soon. WAF has Sanbrado that's improving production incrementally, but none of those other mid tiers, Regis, St. Barbara, Silver Lake, Gold Road, none of these companies are bringing an asset online and improving their production by 30, 50, 80% or whatever. So Perseus is one of the few, and I think that's reflected in the chart. I think it looks stronger than some of the others. It's held up. It's still well above the November lows. That more so than probably it's still 10% up off the November lows. And I think I'm already relatively fully allocated to the stock, but I think there is less downside risk than some of those others because of the fundamental production improvement. And it's not just production, but it's also cost. The new ounces they're bringing online are lower cost. There is some commissioning risk and ramp up risk, but it seems like things have gone relatively smoothly there, and I'm pretty positive on that stock as well. So I might look to add there rather than jumping into something that I think still has some clouds over it, like St. Barbara or Regis. But that's a question of kind of my portfolio, I guess, and being over allocated. Newcrest, I think I just had a look at that chart. I don't actually follow the stock on a day to day. Not looking great. It's still that's broken through its November lows. Just not much sign of support there. It does have kind of a clouded fundamental outlook in terms of production over the next couple of years. Is a bit lower at some of the key operations. So that's why I've always kind of steered clear. And I think I did a video on Newcrest maybe 4 months ago or so, and you can have a look at that one. But my view hasn't really changed there. And I noticed that it has had a bit of an uptick in volume as well in the last couple of weeks. Don't know if there's anything brewing there, but it's not a stock that kind of I'm keen to jump into anytime soon. Plus, I think there's more upside in some of the other companies in terms of just trading the production outlooks, and that's where I sort of specialize. Dacian Gold as a kind of a junior, I guess, and I think this reflects some of these junior charts have held on quite well. Like I was saying, it's held up, had that sort of, they're being driven more by probably a bit more of a speculative element in the market that's still there, that maybe people who sort of jumping into the gold space for the first time in the last year. I think they're still in some of these smaller stocks, and they've had a bit of, I guess, an improvement in fundamentals. So I think what I try and do in my videos is really try and align the technical sort of stuff with the fundamental outlook. And I think if you've got those two ticked, that's you're probably going to be in better stocks than companies that have struggling fundamentals or clouded fundamentals, like I said. So it's held pretty well since that big move up in early January. The stock's held on reasonably well, hasn't pulled back too far. So that looks like a pretty positive chart, and that's one of the better looking charts that I'm looking at. A couple of other stocks. Red 5 I thought was, if I got that there, not showing up. There it is. Another one that looks pretty weak on the developer side. It's testing these levels, that lows around that 20 cents. I've been a bit negative on the stock. Below 20 cents, would I be interested? Maybe, but again, they're sort of a combined developer producer. The main story is the development project, but while you've got weak production numbers, and haven't done a video on their quarterly, it's potentially sort of a one for the bottom drawer at 20 cents, but I sort of still look at it and I think there's better value in some of the development projects elsewhere, particularly on the TSX. So I'm not inclined to jump in, but it's one that's on my watch list. So that's probably enough of a big overview. I might have a look at Northern Star. I did a video on Northern Star earlier today. Another one it's back to its November lows. As I said in that video, I think there is some stuff here around the Saracen transaction and potentially games being played with the stock price and sort of hedging between Saracen and Northern Star shares. And we also have and I mentioned this in the video, we also have a potential sell down of Northern Star from the GDXJ if it's dropped from the juniors index in the March rebalance, which I think is likely given the stock is now going to be by far the biggest company in that index. And in the December quarter, the GDXJ dropped out Kinross, a large Canadian listed company, and that put some pressure on Kinross. So I wonder if there's the market's kind of predicting that move, and there's still people kind of putting pressure on the stock on the downside. And I think Northern Star, the shorting statistics had gone up quite a bit. That, like I said, I think shorts were rotating into Northern Star and buying Saracen potentially. So all these sort of games that funds play to make a couple of cents here and there. But I think the stocks is fundamentally still has a pretty good outlook. But we need to sort of see more clarity on what the merger is going to bring in the next few months. Evolution, I did a video on Evolution this weekend as well. I think they're chart-wise, it's trying to find a bottom here at that sort of gap level around this 460. So it's probably a better looking chart than the Northern Star one, and better looking than a couple of the others too. So maybe worth a look here as well. It's another one I'm tracking. So that's probably just a brief overview of a bunch of different stocks that I'm sort of just keeping an eye on. Looking at a lot on the TSX as well. Looking for sort of medium-term value plays here. I think fundamentally the gold space is still pretty positive. A lot of these companies are pumping out good numbers, good production numbers, good cash flow. The dividend yield on some of these stocks is the best it's been. We've got stocks trading on 3% plus dividend yields, both in Australia and in Canada. That's very positive. So fundamentally, I think that the gold sector's in good health as well. And very little debt is another thing, and there hasn't been any signs of sort of massive dubious acquisitions and overpaying for assets. So there's no major signs of companies doing bad things. So this seems like a good time to keep adding to gold miner positions if the gold price can hang on here, which is always the case in the gold industry. You've got to keep one eye on the fundamentals of the stock individually, but also on the gold price. But assuming the gold price can hang on, it looks like a good entry point for me. And I'm sort of just not trying to pick the bottom here, but just trying to average in at a bit more of a slower pace and don't need to jump in too quickly. And that's been where I've sort of stood for the last couple of months. But I do have that tendency to rush into things and not get the absolute bottom if we have a sell-off. We could still have the stocks, the broader indices sell off if we had an S&P drawdown of 10%, and that correlated with a higher US dollar and a sell-off in all US dollar assets as well, we could see a spike lower in some of these gold stocks, and I want to be ready for that occurrence if it happens. So that's just a quick overview, and I'll see you next time. Thanks very much.